Danie, Laurel.
And in just Delos Santos, we're half an hour into the first trading day of the month. Can you believe it? It's already October. But first, let's go straight to our top story. The national government is asking an additional 540 billion peso financial assistance from the Bangko Sentral in a bid to plug the widening fiscal deficit amid the health crisis. Central Bank Governor Ben Jokno says the government asks the provisional advance to be settled on or before December 29 at zero interest. Jokno says the request will be formally submitted to the Monetary Board soon, but he did not specify a date. Should the request be approved, advances from the BSP will hit 840 billion pesos, just 10 billion pesos short of the 850 billion peso limit. The government expects this year's budget deficit to reach up to 9.6% of the GDP. The national government's continued borrowing to fund its pandemic response has brought outstanding debt to 9.6 trillion pesos as of end August. That's 5% higher from July. Meanwhile, the Bangko Sentral has so far injected about 1.5 trillion pesos into the financial system, equivalent to about 7.6% of GDP. This is part of liquidity easing measures to address the downturn brought by the pandemic. Domestic liquidity, considered the broadest measure of money supply, rose nearly 15% to 13.6 trillion pesos in July. Governor Jokno says liquidity remains ample. All right, Dan, there's one piece of good news that came out just a little over an hour ago. Our manufacturing sector, keeping in step with China's recovery, break those fresh figures for us.
All right, so yesterday we had reported the China PMI figures actually beating the Bloomberg estimate. So again, another expansion when it comes to both their manufacturing and non-manufacturing areas. And we seem to be keeping in step, at least for the month of September. So you can see on my terminal here, September manufacturing PMI 50.1. That's versus 47.3 in the month of August. Now, just recall that if it's above 50, that does signal an expansion. And this is the highest reading we've seen for the PMI since February in 2020. New orders, at least in terms of manufacturing, had risen versus the prior month. So not a bad showing here. Let's take a quick peek at how our local currency is possibly reacting to that. You can see a strengthening a touch here at 48.44 to the greenback. And this after, like you mentioned, Jess, October 1 na. And this happened to be just after the peso completed its best quarter in a decade. So a best quarter in 10 years just yesterday. That was the third quarter. And according to Credit Agricole and Nomura, we even have further scope to appreciate. So what has boosted our, currency? And you can see that on the downward trend towards the right end of my chart here, that green line that our peso has been strengthening. That's because of the rising surplus remittances, which, as you recall, had surprised on the upside. A lot of people had expected that to be contracting during the pandemic, but it had been increasing, in fact. Now, there's also high FX reserves here that the central bank has mentioned, and that has been giving Nomura the confidence to say that the peso might even further strengthen to get this 48 pesos to the greenback. Now, I just want to take out the world currency ranking system over at Bloomberg. I think I'm hearing an echo here. I can ask the producers to take out that echo. But nevertheless, you can see the Philippine peso returning 4.6% year to date in Asia. We've not only beaten the rest of the Asian currencies, we've also beaten even all the other, developing country currencies in the rest of the world. So not a bad showing here. But as you recall, you've actually got Central Bank Governor Ben Jokno saying that this rally might not last. He's actually saying that they can assure the Filipinos that the value of the peso will be steady at around current levels. Recall that a strong peso is not necessarily good for exports. It's also not necessarily good for remittances. It's a lower value when they, translate those offshore currencies into peso. And there are also a lot of risks to remittances. The government expects almost 300,000 overseas Filipinos to be coming home to be repatriated this year. Now, just let's take a quick step back and take a look at the equity space in terms of global markets. Take a look at the U.S. markets. Dow Jones up by 1.2% on Wednesday's trade. You've also got the S&P 500 up by 0.83%. So this after Treasury Secretary Steven Mnuchin said there had been no agreement on a pandemic relief, but talks would continue. So that was a very, very volatile session here. Now, over in Asia Pacific, it's a bit of a mixed picture, specifically because you've got markets over in China, Hong Kong, Taiwan, and South Korea shut for holidays. So it's basically just us with a few other countries still trading today. Now, let's take a quick peek at whether we are opening in the front foot and whether those Wall Street gains are actually spilling over 58.60. So not necessarily opening with gains here, but rather flattish. We're actually down by 0.06%. And this follows a rally that we saw yesterday up by 0.4%. Jaffet and Tianco Phil stock saying the sentiment had improved because of the PMI figures that came out in China, but it does seem that markets have yet to digest our own PMI figures. Yesterday, value turnovers were actually sliding to just 5.5 billion pesos. Net foreign selling continuing for a 14th straight day. The silver lining here, though, is that the stock markets, according to analysts, might be improving in the fourth quarter. In fact, we might be seeing us going back to 6,000 levels. This is according to analysts at PNB and First Metro. You've got PNB's Mr. Arogo saying that because of the coronavirus pandemic, we had a 32% quarter-on-quarter drop in the first quarter, but it had recovered in the second quarter by 17%. So there was a recovery in the second quarter, but definitely not as good as what we had seen in terms of the drop in the first quarter. But he does say that in the third quarter, we had bargain hunters swooping in, and we might be seeing some gains in the fourth quarter. Now, what will these gains be contingent upon? That will be contingent upon the third quarter GDP, and that comes out on November 10 pa, Jess. So if that comes out better than expected, we might be seeing our index moving back above 6,000 levels. I just want to take a quick peek at some specific stocks I'm particularly watching today. First off, San Miguel. So San Miguel has actually been in the news as of late because of the fact that their Bulacan Airport's franchise bill is now set for Senate plenary discussion. Now recall that this is a bill of big contention. It's granting a 50-year, that's a really long franchise, 50-year franchise to San Miguel Aero City, wherein you have 10-year maximum of design, planning, and construction, and an exemption from direct and indirect taxes during the 10-year construction period. Now, relatedly, they've actually also just secured regulatory funding nod for 20 billion pesos of a preferred share offering. So again, they've already been very vocal about this offering, that they will be using those proceeds to support that airport in particular. But you can see San Miguel opening on the back foot, that's down by 0.1%. I just want to take a quick peek on Double Dragon. We haven't taken a look at this, and that REIT offering is still in the works, so it hasn't really been set here. But nevertheless, they've been saying that that's actually almost there. So we're going to be expecting a Double Dragon REIT very soon. But just in general, they're going to be using that as well as other things in their arsenal to have a 150% equity growth by the year 2030. So they're actually targeting to expand their total equity with income growth, but also from the real estate investment trust. Now recall that, compared to a lot of other property players, they had actually booked a net income growth of more than double during the first half of the year, during the pandemic, compared to last year. The revenues had actually risen 45%. They did mention that their properties tested resilient amid the pandemic, and they said, get this, even their hotels had high occupancy because they provided accommodation to BPO workers, and also their grocery stores, Mary Mart, will be one of the anchor tenants of their warehouse hub. So a lot going on for Double Dragon here. That is up by 2% amid all of this news, trading at 14 pesos and 28 centavos, Jess.
All right, Dan, but if there's one superstar stock of this pandemic, it would have to be Pure Gold. And now they are completing their largest note sale ever. Tell us more about that.
Okay, so Pure Gold doesn't stop, Jess, right? So you mentioned it's just been the number one best performer year to date. People are still buying food and, cooking at home, eating at home during this lockdown. And like you mentioned, biggest ever sale of notes. That's 12 billion pesos of fixed rate corporate notes. And they're saying that this debt sale reflects the company's confidence in the expected economic recovery of the Philippines. So they also said that, despite the pandemic, expansion plans will be continuing. So these are actually 7 billion in tranches, no? So 7 billion pesos of 7-year notes. That's going to be around 4% interest. So a bit higher than what we've been seeing as of late. And also 5 billion peso 10-year notes at an interest of 4.513%. So proceeds will be funding opening of more Pure Gold and SNR stores in strategic areas. So expect Pure Gold not to be stopping there. Now, just moving on from specific equities over to the banking space, just in general, resources depleted, borrowers having a difficult time to repay, and one debt watcher is expecting the loan loss provisions by banks to be elevated even next year. What is Fitch saying?
And the thing is, you have Fitch saying it's not just here in the Philippines, it's actually region wide, it's across Asia Pacific, but more so here in the country. That's after the Philippines, according to them, will book the highest increase for bad loan provisions up to 2021. That's really basing it from how we performed back in June. The country at least recorded the highest jump in bank credit costs at 2.4%. That's coming from just 0.4% during the end of 2019. Also, that 2.4% surge in bank credit costs actually also beats a regional average here. Regional average for Asia Pacific is just at 1.26%. Now, comparing that to how other countries are performing here across Southeast Asia, where you'd see here Indonesia is just coming in second, followed by Thailand and Vietnam. Other countries did manage to at least eke out some increases as well. In fact, according to Fitch, most of the region recorded significant increases in bank credit costs. However, the jump here that we saw in the Philippines actually reflects the pandemic's severe economic impact to the country and that it hit at a late stage of the credit expansion cycle. Now, according to them, the provision is seen to actually remain elevated in the second semester and all throughout 2021 as the economic fallout lingers, straining really the repayment capacity of borrowers. Now, looking as well at the data here from the Bangko Sentral, you'd see here that the provision for bad loans has actually climbed more than 5 times to 103.8 billion pesos in the first semester of 2020. Wow. Compare that to the same period in 2019, just coming in at 19.75 billion pesos. Hence, you have the banking sector earnings plummeting by as much as 29% to 86 billion pesos in the first half of the year. And Fitch basically is expecting, that the profitability of our banking institutions will actually fall until the end of 2020, at least year on year. Again, we have been harping on about this for the past couple of weeks here. You have non-performing loans hitting its highest in 6 years back in July at 2.67%. And according to Fitch, the Philippines has recorded, at least the rapid loan growth that the Philippines has recorded in the decade leading up to the pandemic. According to them, that's going to put the quality of lending over the period to the test, especially for the vulnerable consumers and small businesses.
Exactly. As you mentioned here, I mean, quite fitting that they're increasing the NPL provisions, given that another debt watcher, so you said Fitch Muna, but also S&P is actually flagging the fact that a lot of consumer loans, a lot of MSMEs might be defaulting, and there might be even bigger risks from that. Now, that's what they're saying.
Exactly. The S&P Global is saying, these loans to consumers and small businesses, MSMEs, might actually contribute or at least boost NPLs for the rest of the year. That's as asset quality of the banking space is expected to deteriorate once again, weighing on profitability, in turn affecting consumers and businesses. Really, it's a never-ending cycle here. If you try to take a look at how things are happening, at least in the banking space here. So how do we reduce risk of defaults? According to S&P, it's what's going to matter really are the support measures coming from the national government and the Bangko Sentral. According to them, forbearance on loans will provide some form of a breather here, especially for rural and thrift banks that typically lend to a weaker quality of borrowers. Now, as for conglomerates, since they account for bulk of the loans here, they are expected to weather the storm because of their strong profiles, diverse revenue streams, solid liquidity buffers, and moderate leverage. Recall that the S&P did say, they are expecting the country's economy to shrink by 9.5%. In full year 2020, that in fact is deeper than what the government is projecting. According to them, anything steeper than that would take off a sharper deterioration in the financial space asset quality due to potentially higher large corporate defaults.
Well, that's a problem there, Jess, diba? I mean, the central bank has been very aggressive in easing and also cutting the triple R
Mhm.
ratio to be able to lend to these banks, to these MSMEs. But the question is, are the banks willing to take those risks? Thanks for that
Exactly.
update.
Now, here are other headlines we're keeping our eyes on. The Philippines may start to see a pickup in recovery by the fourth quarter, according to the outlook of First Metro Investment and the University of Asia and the Pacific. Economists from both the FMIC and UANP are now seeing signs of mild recovery following the release of economic data pointing to easing unemployment and slower inflation. The outlook also noted milder quarantine restrictions in September, which led the way for more establishments to reopen rather. Months of strict lockdown paved the way for a 16.5% economic slump in the second quarter. Both institutions expect the country's full year GDP to shrink by 8.5%. Close to this estimate is that of Fitch Ratings. The credit rater revised its outlook to signal a deeper contraction for the country amid the continued spread of COVID 19. Other debt watchers have likewise adjusted their forecast downwards, while our economic managers are keeping projections within a 4.4 to 6.6% contraction range. Economic officials are expecting a rebound by next year, noting the country's strong fundamentals. Now, moving on to other stories, the Trade Department is looking to sign bilateral preferential trade agreement or PTA with India to diversify the base of Philippine export products shipped to the region. The DTI says a PTA is practical for both countries as it reduces tariffs for a particular set of products. In a statement, DTI said the Philippines and India have agreed to, quote, manageable bilateral approach. This as India previously withdrew from an economic partnership with 10 ASEAN countries and other major trade partners like China, Japan, and South Korea over concerns about the deal's repercussion on India's farmers and small businesses. The DTI said a PTA is a more focused approach that not only improves the current trade levels between the two countries, but also diversifies the covered products for trade. India Ministry of Commerce Joint Secretary Anant Swarup has called on both parties to engage in consultations ahead of negotiations regarding the trade deal. India was the Philippines' 11th largest source of imports last year, while the Philippines was India's 17th largest export destination.
The BIR said it is no longer extending the latest registration period for online businesses. That's as the deadline was already moved twice. The original deadline was July 31, which was subsequently postponed to August 31st, and the final deadline was yesterday, September 30. Now, the agency explains that online businesses had been given enough time to register after they released a memorandum circular in June, reminding online sellers to do so. Late registrants will be subject to penalties starting today. The circular says online sellers found to be doing business without complying with BIR requirements or those who fail to declare past or unpaid taxes will face sanctions under the law. The BIR reports that so far almost 7,300 online businesses have already registered. Now, if there's one silver lining to being locked down, it is the acceleration of digital payment adoption and financial inclusion in a country where cash used to be the reigning king. And there's one newcomer ready to press the gas pedal on that trend. We have with us PayMongo COO Edwin Lacierda. Good morning, sir, and welcome to the broadcast.
Good morning, Danie. Pleased to be here.
Sir, such an exciting space, but I have to admit it kind of gets confusing. Lalo na now, we're being bombarded with all these different payment options, everyone racing on that trend. Tell us what is so different with PayMongo compared to all the other e-wallets, digital banks, payment platforms out there.
Well, let me just give the history of PayMongo. PayMongo is just a year-old company. We are a Filipino fintech startup that started last year. We're basically a payment platform which aggregates all the payment methods. For instance, we accept credit card, debit card, GCash, and GrabPay, and all the over-the-counter payment methods. Where we put them in one platform, and we offer this platform to merchants, who in turn offer them to their respective online buyers. We're purely online. We started off last year, and we got accepted in the Y Combinator accelerator program. Y Combinator is the premier or the seed incubator in Silicon Valley. They've housed several big startups right now. Familiar names like Airbnb, Stripe, Dropbox, DoorDash, and a host of other startups that began with them. And we were accept. It was a very uh, difficult process. There are
Mm-hmm.
about 12,000 applications per batch, and they only accept 200. And we're the first Filipino fintech startup that they
Wow.
accepted. And there was a 3-month program that we got incubated, we got trained and how to do business. And after that, we were able to attract Silicon Valley investors, and we were able to secure $2.7 million in seed funding. And from that, we went back to the Philippines and started the PayMongo. And we started last year, basically sometime around October or November. And the the adoption was quite fair. It wasn't that fast until the pandemic hit, when people suddenly realized, because of the lockdown, there were no brick and mortar businesses working. So they were forced. The adoption towards online became drastic, and people were looking at how to do business. So the only place to do it was online business. But the foundational problem with online businesses would be, how do I get paid? And
Mm.
previous to PayMongo, and how they do it with online sellers is that, for instance, if you're selling on Facebook, you'd send your bank account number to the prospective buyer. The buyer goes to the bank, pays for it, and then
Deposit. Yeah.
takes a screenshot of the deposit slip and send it back to the online seller. And that's a pain point where we were able to
Mm-hmm.
identify, and we found a solution to that by allowing small and medium enterprises to go online, accept payments easily, and that solves a pain point, and allowed facilitated the growth of more merchants online. The the value proposition that we have are basically two things. We wanted Our target market was the small and medium enterprises. Previously, there were legacy payment providers that really just focus on enterprise merchants, the big companies. We
Mm-hmm.
felt that the Philippine Statistical Authority stated once that 96% of Philippine businesses are small and medium. And that's a huge untapped market where the legacy providers were not offering services, primarily because there's no volume. They
Mm-hmm.
bank on volume on at least the legacy payment providers. We felt that as we onboard more small and medium enterprises, it would be easier for them to get attracted and be able to do business online. And so that's one of our main value proposition. The other value proposition we did was to make onboarding easy, and to make small and medium enterprises be more accessible to accepting payments. Our payment process is done in 3 steps. You
Mm-hmm.
can pay immediately in 3 steps. So that solves also the bandwidth problem in case your internet connection falls off. We're able to do that in 3 steps and consummate payments. So because of these two things that we did, a lot of merchants during the pandemic felt that this was a solution to their problem. So I suppose we were at the right place at the right time. And while perhaps COVID is an unfortunate incident, it was a inflection point on the Filipinos. It forced everyone to adapt to the online business and online commerce. I mean, we would assume that prior to that there was a low level of trust and confidence on online payments, but because of the pandemic, I mean, they had to trust the system, and we were able
No
to provide.
choice.
Right. There was practically no choice to except to resort to online businesses, and we were able to prove that with our fraud engine, with our
Mm-hmm.
nimble payment experience, we're able to gather more and more merchants through our platform.
All right,
And
Sir Edwin,
yeah,
just right here, I just want to jump in very quickly here. And like what you mentioned, you have the pandemic somehow really accelerating how PayMongo has performed over the past few months here. We're talking a transaction surge of as much as 42%. The question is this something that you see as sustainable, or is it just because of the lockdowns? Do you see this actually being sustained even beyond the pandemic? And at the same time, what's the reception really here coming from the small businesses here, especially we're talking about the more traditional ones? Are they somehow really more willing to adopt to this new mode or system at least?
On the question whether it would this experience proceed beyond the pandemic, we believe so. A lot of you've noticed during the lockdown that we had the most severe lockdown, and people were forced to migrate, and we had a lowering of the restrictions on the lockdown, and we saw a continued rise in online transactions. So we see the need for online payments. I mean, there's really a strong adoption now on online payments, not to mention the fact that there are several marketplaces which also pave the way for increasing the trust and confidence of online transactions. And also the delivery services have vastly improved, so the last mile logistics have improved. So there's a increase in trust and confidence on online payments. So we believe that the trend is continuing, and based on our data also, there's not been a lag in transactions. We have continuously increased our payment processing and month over month, and in terms of the merchants who are coming on board, while we catered primarily to small and medium enterprises, large enterprises found that our platform is also agnostic. It's something that can conveniently cater to their business needs. So we've got large enterprises that we're onboarding right now, and they're using us for their marketplace, for their several branches in their businesses. So there's being an agnostic platform, we're able to allow and entertain merchants of all sizes. Although our main vision is really to continue to harness the small and medium enterprises to do business online. We've got our new merchants are those who've never had any experience, and they decided to take a leap because we have a one product which does not require, you don't have to have a website. For
Okay.
small and medium enterprises, the pain point would be, do I need a website to be able to conduct business? And our solution was a PayMongo links, where you don't have to have a website. You may be selling on Facebook or Instagram. We have one product called the PayMongo links, where the seller just sends a link to the buyer, and when he clicks on the link, the payment platform
You
comes
can
out,
pay na.
and you can pay now. So that's how. So you don't need to have a website. You don't need to integrate. You don't need to have a developer to do the API integration with us. The other one, the more for the enterprise merchants, we have the API integration. So
Mm-hmm.
we allowed websites to integrate with us. The one value also that we have is we don't hide our API documentation. Once you sign up with us, the API is all public out there. Most of the providers do not disclose their API for one reason or another. But we felt that to have a wider adoption in the community for the developers, we open it up to the developers or enterprises who have developers to just develop and see with a few lines of code, you'll be able to integrate PayMongo to your website. So that's our two
Okay.
value proposition, I think.
Sir, congratulations on the funding. So Series 1, $12 million. It brings your total funding to $15 million. There were some articles, quite anecdotal rather, on fintech during the pandemic, saying that might be swallowed up, especially since banks, the biggest banks, are gonna start tapping digital na rin, diba? It's something that they weren't
Right.
really concerned with. There were other products out there, but now it's something that even the biggest banks are gonna be doing. How did you manage to raise this money? Why were they willing to take such big risks? I just want to mention, you have Justin Matian, who is co-founded Tinder, Peter Thiel co-founded PayPal. Why did they give such a vote of confidence in a high-risk environment with the biggest competitors also starting to be more aggressive?
Well, for one thing, payments is foundational in the online businesses. It's really the end question for any merchant is, how do I get paid? And that's and we saw the problem, the pain points in our Philippine internet landscape. So we're able to provide that solution, and I would say with some modesty that our technology is superior. It's so easy to onboard. One of the problems, in fact, to tell frankly, Dan, we are in fact dealing with some of the biggest banks, and they're very curious about our technology. In fact, they've asked for a walkthrough on how do we onboard. I mean, we're registered, we're supervised by the Banco Central, and yet we're able to onboard merchants in 3 to 7 days. For other legacy providers, it'll take them as short as 1 month to 3 months. So that's why there's a huge adoption by small and medium enterprises to just come with us. And the banks, while they are also interested in going into that particular landscape, they're more focused on developing their products like direct online banking. So they offer their
Mm.
banking method as a payment method, which we are also looking at as a source of as another payment method. In fact, we've got some discussions with several banks right now on the idea of using their banking services as a method of payment. Not in the sense of being enrolled with them, but using their bank account as a way of just transacting directly to the business. So that's why it's called the direct online banking. It's something that's new to the market, and it takes a lot of discussions with the financial institutions because they're primarily conservative and they're afraid of phishing.
Mm.
But we're able to convince them that this is the way forward. In fact, we've spoken to more than 5 big banks, and they've asked us to give them a walkthrough of our compliance process and also a walkthrough of our fraud tool. And they've seen that yes, it can be we can partner with PayMongo. So that's something that we're looking forward to. In fact, even the the credit companies like Visa and Mastercard, we've showed them, we've given them a walkthrough of our compliance process. It's very important for them. Sigurado ba kayo na your merchants are all
Mm-mm.
legit? And we try to weed out all
Actually.
the bad actors. So our KYC process is not, it's not just taking a picture and showing the ID. They're surprised because that's the idea of KYC sa internet is that an ID and your picture. We go beyond that, and we do a rigorous vetting process during the KYC, and that's a value proposition that the banks are so surprised that you can
Mm-mm.
do in 3 to 7 days because
So you're
everything is
actually doing the
online.
job for them. You're doing the
In fact,
KYC for them.
Danie, actually, it's more. It's we're actually doing the KYC process for them. In fact, we're asking
Mm.
for more responsibilities on their end to give it to
Uh-oh.
us, and we underwrite the risk. However, the problem being a conservative financial institution, they want to hold on to some of their KYC,
Also,
which is
okay.
totally understandable. But to get more of the services that we do the KYC, we underwrite the risk, we're able to onboard more merchants. And that's a way of telling the market, look, if you want more businesses, it's here. You allow us to
Mm.
onboard. We're quite bold in making that statement because we believe our technology can read out in the KYC process, also in the fraud in the transaction process. We're able to weed out the bad actors. In fact, our fraud dispute rate is 0.01%, very, very low. The standard is 1%.
Okay.
So we're very, very low. So it's something that they're looking into.
Mhm. So more on this huge funding that you just got here, sir. Where do you see this money going? How will this feed into your expansion plans, especially when you're talking about your targets here in terms of onboarding and even your transaction value?
We're looking at using the money to expand to more payment methods. And we're also looking at other business models like subscription, invoicing, and we have all the data that we have that we can also look at different products. So, like for instance, identifying what particular merchant has are they fiscally healthy? So are we able to provide other products like our loan products or our data analytics as a source of products? So we're looking at several products, and most of you would know that the margins in payments is quite small. So we're building on the payment gateway, the payment highway
Mm.
to build more products, looking at the data that we have of the merchants. And we have our data on the merchants are from small, medium, and large merchants. So we're able to see what's the best product that we can offer to our merchant clients. So it's a process of growing that and also expanding our fraud tools, make and growing our team. We're now currently at 48. We started with only about 10 people. Now we're now at
Mhm.
48. We tend to grow
Mm-hmm.
more and invest more on our engineering, invest more on our fraud tools, invest more on our growth team. So it's really a growing process. And eventually, since our payment technology is really agnostic in terms of jurisdictional, it can be applied in any other regions in the country. So we're looking also at expanding towards the Southeast Asian market. Well, our only limitation would be the regulations of each country, but that's something we can also we can discuss with on those particular jurisdictions. But on the whole, the technology is agnostic, that it can be applied to any other countries beyond the Philippines.
Sir, last question before we let you go. We're already running over time. It's super interesting. You had mentioned, not just payments, and you're going to be using this for expansion. Can you give us a bit more flavor on that? If we anecdotally, it's been said that payments don't make a lot of money. Lalo na now, the fees are actually being capped. So you're doing
Mhm.
a service for free.
Lots of
There's so much
regulation.
development, that's going on. Onboarding effort here. Are you going to be using this data to provide other products like loans, healthcare, insurance, things like that other customers are also clamoring for during this period?
Yes, we're looking at the data and we're seeing potential number of opportunities, like you mentioned, loans primarily, and in fact, we're just having a discussion with another financial institution on the prospect of providing loans because we're not licensed to provide loans. So we partner with a financial
Mm.
institution and do that. But that's something way down the line because we're right now just building. And over and above loans, we're looking at also other products depending on the robustness of the data that we have and offering more products as we've envisioned. Those are things down the line. To make money of payments in and of itself, you really have to grow volume, and that's why we're
Mhm.
increasing the volume month over month. Our volume has grown. We're nearing about $20 million in payment processing on a monthly basis. So I mean, on a monthly basis, we're doing about 3.6 million in payment processing dollars now.
Mm.
So that's we're growing that. So that's something that we'll see in term while we're still developing the other products, we grow the margins by having more volume in our processing payment processing.
Thank you for that, sir. So very exciting times, PayMongo addressing the pain points of the small
Mhm.
micro businesses here in the Philippines and having it more accessible to these small businesses to actually make transactions faster and more secure. Thank you so much, Edwin
Thank
Lacierda,
you,
CEO
Danie.
of
Thank you,
PayMongo.
Jess. Thank you very much.
And that's the first look into the business day. Today is Thursday, 1st of October, 2020. I'm Danie Laurel.
Catch us again tomorrow at 10 a.m. I'm Jess Delos Santos. We are One News.
Sir, yung sa OFW po. Hindi, mag-video. OFW naman, paano? Ganyan sa OFW.